Hey y'all, it's Courtney Kretly, your favorite local realtor here in Summerville, South Carolina, coming at you from my backyard. I just wanted to hop on here and talk to you a little bit about some frequently asked questions that I get from my clients a lot. I thought compiling this short video might be helpful, so here we go. I compiled a list of questions for my preferred lender, Gabriella Tripp of the Tripp team at Atlantic Coast Mortgage. So I'm going to read through the questions, her responses, and then I'm also going to supplement with some information of my own. So let's get started with the questions. So one of the first questions that I'm asked a lot by clients is what pieces of information are needed to get pre-approved for a home loan, and how long does it take to receive the pre-approval once you submit all the information. So Gabriella's response was, to be pre-approved for a home loan, you need to complete the uniform residential loan application with a lender. This can be completed online typically, and it asks important questions such as income, assets, your employment history, residential history, and most importantly, your credit history and credit score. Along with the application, you'll need to submit your basic income and asset documentation, and the pre-approval process differs from client to client, but can typically be done in 1 to 2 business days. So that means you're going to be submitting the application online, the supporting documentation, and then you'll be discussing with your lender and hearing back with your pre-approval in approximately 1 to 2 business days. A big benefit of working with my preferred lenders is that they can oftentimes be reached after hours, which is huge if you need a last-minute pre-approval or have a question or an emergency come up. So that's definitely a benefit of working with a small local lender. The next question is, how long do you have to shop for a lender without taking another hit to your credit score? So there's no absolute answer to this. Gabriella advises that her clients to apply with their top lender choice first, and if they choose to shop past that, keep it to a total of 3 credit pulls within the first 30 days of shopping. However, make sure that you've selected your lender decision prior to going under contract to have that decision finalized for contractual purposes. So the next question is, what are the benefits to a client of using a small local mortgage company versus a big bank? So this is Gabriella's response at Atlantic Coast Mortgage. I bring many different values to my clients as a local lender representing a mortgage company versus what a large corporation based online or a bank would provide. Our mortgage company provides a streamlined and smooth process from start to finish. We go above and beyond to help clients stand out in this current crazy market. I'm available to them during and after normal business hours as their direct representative, all while providing dynamic loan programs and the best rates available. You will have confidence that Gabriella at Atlantic Coast Mortgage, your mortgage will close on time and with smiles on everyone's faces. So I just wanted to add a little bit here to this question. Another benefit of using a small local lender is that they know the market here. So when they go to get appraisals, they know what homes are selling for here and how to properly appraise a home versus just what they think the home should be appraised for. Sellers also like to see local lenders on the offers oftentimes versus bigger national companies. And then smaller local lenders tend to be able to get the job done quicker because they have less corporate hoops to jump through. So that's another thing to keep in mind by using a local lender. So this question is really prevalent in today's market because a lot of people are doing a new construction home, but they're trying to sell during the hot summer market. So they're wanting to stay in their home for a little bit after the sale goes through. So this is called a rent back scenario. So how long can a client rent back after closing on their home? So keep in mind that clients purchasing a primary home must occupy the property within 60 days of post-closing. So after you close on a home, according to your mortgage company, you need to live in that home within 60 days. So let's talk about incentives with a lender. So if you are going the new construction route, I would get a quote from their lender, but then I would also get a quote from a small local lender, of course, preferably my preferred lender, just to see how they compare. because a lot of times new construction lenders charge additional fees, and that's how they're able to offer the high incentives. Another question that I get a lot is how much or what percent of the purchase price should you expect to spend on closing costs? And this is a great question. So there are different factors that will impact this amount, including the purchase price and the loan type, for example. However, for a conventional loan, a standard average is 2% that a client can expect to spend on closing costs. So let's talk about those awesome first-time home buyers. How does a first-time home buyer receive grants, and what are the amounts offered? And are these state programs, and how do you qualify? So there are programs available to assist first-time home buyers who qualify for down payment or closing costs assistance loans. They come in the form of a grant or a state bond. Each program differs in the amount of assistance and has its own qualification requirements, such as credit scores and income, and it's limited per county. In order to qualify, you will submit a traditional loan application, and your lender will assist you with which programs you can qualify for. So let's talk about Ribbon, which in this market has become pretty popular. So can you explain what it is and the fees associated with it? So Ribbon is a standalone company that offers clients an option to put in what appears to be an all-cash offer for a home. Ribbon charges a fee for this service for the offer. And the entire goal is to have your chosen lender close on time so that Ribbon doesn't actually have to pay the cash for the home. It's the job of the lender to confirm with Ribbon that the client is qualified to purchase the home and that they verified income, credit, and assets. And the most important job is to make sure that they close on time according to the purchase contract. This will allow Ribbon to not be needed for the purchase of the home, and therefore financing the property as normal in place of the cash offer. So what is a bridge loan? A bridge loan allows clients to purchase a home without a home sale contingency, which we all know in this market is huge for an offer. A local mortgage company can finance a bridge loan, all done in-house to clients who qualify. So here's an example of a scenario. A client owns a home as a primary or a secondary home. The equity and down payment from this home is then used to purchase another primary or secondary home. So the loan allows them to bridge the funds from the home that will be sold to the new home that will be purchased. So what is a piggyback loan, and how is it used to get rid of PMI or private mortgage insurance? So this would be a first loan and a second loan, such as a home equity line of credit, done simultaneously. It allows a client to qualify for a large loan, such as $1 million loan, with only a 10% down payment of their own funds, while borrowing 10% from a second mortgage to meet the 20% down payment to get rid of the PMI. I know this sounds confusing, but think of the 80-10-10 rule. So 80% is financed, 10% down payment would come from you, and 10% would come from a second mortgage to fulfill the 20% in order to get rid of PMI. What is your best advice to clients on how to repair bad credit? For credit improvement, hey, it's me again. I had to move inside my home because there was a bird chirping right in my ear next to the screened-in porch, so it was very distracting. So let's continue on. What is your best advice to clients on how to repair bad credit? For credit repairment, she suggests working diligently with a professional credit repair company. Keep your payments on time. Keep your credit card usage within 10 to 30% of your max credit, and be patient. Credit repair can sometimes be as quick as 30 days, depending on where your credit score is at. Other times it takes the better part of 6 to 12 months, depending on the scenario. So what are the different loan types and the associated required down payments? So a VA loan, you have 100% financed. There is no down payment with a VA loan. An FHA loan, you have a 3.5% down payment. A conventional loan for a first-time home buyer is a 3% down payment requirement. A conventional loan for a non-first-time home buyer is 5% required down payment. A USDA loan is 100% financed as well, so no down payment required. And jumbo loans, which are Atlantic Coast mortgage products, require 5% down payment up to $1 million and 10% down payment up to $1.5 million. Jumbo loans that are not Atlantic Coast mortgage products typically have a 20% or higher down payment required. The next question is, once a pre-approval has gone through underwriting, how long is it good for? Pre-approvals are valid anywhere from 90 to 120 days. After this period, another credit report is required to be pulled, and you have to update all relevant loan documents, such as income, assets, and credit documents. So a wonderful thing about Gabriella Tripp is that she puts her clients through underwriting before finding a property, which is very rare. So she calls this approval plus, and it makes her clients extremely strong when putting in an offer in comparison to other buyers who have not gone through this step and who just have a regular pre-approval. So what is an ARM loan and how does it work, and when is it beneficial to clients? An ARM, believe it or not, is an adjustable rate mortgage. Their terms for the ARMs are typically 5-1, 7-1, or 10-1, meaning the loan is fixed as per the first number, 5, 7, or 10, and then the interest rate adjusts per the second number, 1, so every year after the initial fixed term. In comparison to fixed rate mortgages, there are some pros that could interest clients in today's market, such as potentially lower interest rates than a fixed rate and the ability to pay less interest over the first term, the 5, the 7, or the 10 years. So my recommendation is not to be scared of an ARM, because you can get a lower interest rate for the first 5, 7, or 10 years than you can with a fixed loan. And then after that, you can always refinance if the interest rates are better after that term. So I asked Gabriella Tripp, what are some ways to get around paying the private mortgage insurance, or PMI, other than a piggyback loan? She said you can always put 20% down as a down payment. A VA loan has no PMI. You can put 10 or 15% down payment and pay the PMI off in a single premium up front and then not pay it again monthly. Or their jumbo loans in-house for clients have no PMI at all. Tell me everything you can about appraisals and appraisal gaps, and how often are you seeing homes not appraising in this current market? An appraisal is ordered through an appraisal panel. It's a third-party appraiser, and they determine the value of a home while comparing it to other properties in the area that are of like kind. They make adjustments accordingly for any differences between the comparable properties. Adjustments to raise the value higher or lower based on square footage, location, rooms, quality of the home, view, etc. Appraisal gaps are becoming more common as the demand for home reaches all-time highs. Gabriella would say that out of every 10 homes, perhaps 1 or 2 are under appraising. Sometimes it is just by $5,000 or less. It's very rare for a large gap to happen, but it is possible. Lenders will only finance up to the appraised value of a home. Therefore, any amount under that appraised value is called a gap and must be added to the cash to close for the home. It is a difference that the buyer is liable to pay if they have waived their appraisal contingency in the contract and decide to proceed with the purchase regarding the lower value. So make sure when you're filling out your offer with your real estate agent, hopefully me, that you're paying close attention to what you put in the appraisal contingency section on the contract. If you make it not contingent on the appraisal, that means that you would have to cover any gap in the appraisal in cash. So what does it mean to buy points with a mortgage? Buying points is one of the many terms used to refer to discount points. So you can call it buying points, discount points, buy down, points, origination fee, rate buy down, etc. There are all kinds of different names for it. But mortgage points are the fees a borrower pays a mortgage lender in order to reduce the interest rate on the loan. So how do you lock in an interest rate, and for what period can it be locked in for, and how much does this cost clients? So you can do a lock period of 120 days with Atlantic Coast Mortgage. Upfront fee is 1 point, refundable at closing if the borrower closes their loan with Atlantic Coast Mortgage under the original lock terms. So I asked Gabriella, what are you seeing for current interest rates? And of course I asked her the loaded question, where do you see them going by the end of the year? So she answered, 2022 was predicted to be a year where rates finally increased since before March of 2020. The Federal Reserve has held steady on that promise, and we experienced one of the fastest rising rate environments in mortgage history. For the remainder of 2022, the general prediction is that they will continue to rise or sit over 5% or even a bit higher than that. I believe a down will come. The trouble is trying to predict when. The best news is that you can always refinance when they do go down. But you can't get into a home for cheaper than it is today. Those values will just increase. So those are all the frequently asked questions that I have for y'all today, but if you have any more questions, feel free to reach out to myself or Gabriella. We'd love to answer any questions that you have. And then I also wanted to take a moment here at the end of the video to talk about my final thoughts, the current state of the market, interest rates, a few things like that. So we have noticed that the market is cooling down a little bit recently. So we are seeing a few more homes on the market currently, and they are sitting on the market a little bit longer than they were earlier this year. And they are also getting less offers per home recently as well. Likely this is because of interest rates and people are getting a little bit nervous about that and they're choosing to stay where they are at the moment. However, the Charleston area is still such a popular area that I just don't see the values of the homes decreasing in the future. I see them possibly stabilizing or continue to slightly increase. I just don't see them decreasing. And keep in mind, what goes up must come down. So interest rates have been rising rapidly lately, which I feel like is the most concerning part. It's not about the fact that they are going up, it's about how quickly they are going up that has people concerned. But like I said, what goes up must come down. This happens in the market all the time. Interest rates go up and they come back down. And remember that you can always refinance. So if and when they do come back down, you can refinance your loan at the better interest rate. So think back to what your first mortgage interest rate was, or ask your parents or grandparents. It's very likely that it was much higher than where the interest rates are now. What we were seeing in the past couple of years, the 2s and 3s, that's not the normal. Where we're at now is more normal. So please keep that in mind and don't be scared of the interest rates. I'd love to give a huge shout out to Gabriella Tripp with the Tripp team at Atlantic Coast Mortgage. Thank you so much for taking the time to answer these questions. It was very helpful, and I encourage you all to speak with Gabby about your mortgage, and I will include her information in the comments below. Thanks, y'all. I hope you found this helpful. Bye. Thank you so much for watching my video, and if you liked it, please give it a thumbs up and subscribe to my channel. And if you're interested in the Summerville area, please give me a call. I'm looking forward to talking to you.